All right, welcome back to the boot camp. It is day something, day 12, 13. I think it's day 13. Let me see. All right, day 13. It is day 13. Lucky, 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 day 13. All right. Today we're going to be discussing data wicks. This is an S tier draw on liquidity. You're going to be, if you see these, fucking target them till the wheels fall off. All right. Eventually they will get hit. Doesn't matter how far back they were, they will get hit. And the majority of the time, they get hit in the same day. So with that being said, liquidity, data wicks, let's get into it. So what is a data wick? All right. Look at that big, juicy data wick. Talk to me nicely. All right. So this is when they run above a high or run above a low. You know, they trigger stop losses and they end up just trapping a bunch of traders within this high and within this low. All right. So price often revisits it to trade back to it to refill and rebalance these orders. All right. So the way that these are found is knowing when red folder news like CPI, FOMC, NFP, PPI, those red folder news that we went over in the past video. The fact of the matter is that these are strong draws on liquidity. All right. And once you see them, they're going to be very hard to unsee because they're so giant. All right. Once you go data wick, you never go back. All right. So with that being said, how we should use them. 930 wicks are something we'll get into in a future video. These are strong draws on liquidity too. 930 wicks are a solid draw on liquidity. Liquidity. All right, so let's clear out this. All right, we have a data wick from 7:30 this day. This is a data wick. We have this one. This was FOMC. So this was FOMC. We'll go 5 minutes for this one. I want to say there was a wick on this day during FOMC. Technically, this was the open. It wasn't a swing high, but it was the data release. So with FOMC, it's a two-phase. So we're looking to sweep out the low, and then we will return to the high. But this is not a exaggerated version of a data wick, but this was important data release. All right, this is a good one. It's a nice data wick. All right, so I will grab a couple of examples of data wicks and we can see them get traded back too. All right, so there was this one data wick. I think it was yesterday, Monday. Yeah, so Monday. There was a data release at 7:30. And you can see this candle, and this is why we'll discuss 930 wicks as well, because these 930 wicks are strong draws on liquidity as well, and we treat them kind of like data wicks. All right, so you could see this body, and then we can see this giant wick. The wick of this is the data wick. All right, and you can see how perfectly price comes back up, sweeps it out, and then obviously moves away because it has now swept the liquidity. We ended up putting in equal highs with an Asia high, and you can go back to the video on session liquidity. But the main discussion of this video is going to be data wicks. So you can see it's revisited, and this is within the same day. All right. There are times where price does not trade back to a data wick for an extended period of time, but it will trade back to it eventually. All right. Data wicks are not forgotten about. So we have this data wick right here, and we can look at the candle itself again. Come on. Yeah, you can see this candle. Like, it's just massive. All right. You look at all these candles next to it. This is a 40-point candle. And then, we have candles before it that are 20 points. And then you go and see a data candle within 1 minute, and it pushes up 137 points in literally seconds. All right. So these data wicks are super strong draws on liquidity, and eventually they will be revisited. So typically they're revisited within the same day, but in this situation, we had this liquidity void that we ended up selling back through. And today, this morning, actually, we ended up trading to this. All right. So this data wick was actually revisited. So this was a prime example that market does not forget. Okay. Market does not forget these data wicks. It does not forget session liquidity just because it's moving. This is how pricing is rebalanced. We have massive pools of orders above and below old swing highs and swing lows. Well, what is a data wick? Well, it's a swing high or a swing low, and it creates this nasty wick. In this situation, this is not a data wick because it's not a swing high. All right. We have this swing high prior to the actual data release, which was the FOMC and interest rates and stuff. But as you can see, we full circled and came back up to this data wick. All right. So market didn't forget, came back same day. We can go back even further and over and over and over again. This will occur. All right. So this day we ended up right here, putting in this data wick, and we revisited it almost instantly. All right. So price overly aggressively buys, and then we end up getting a data wick that massive orders are pulled above. All right. And once we took this out, we consolidated for a little bit. All right. But we can just keep going back and going back and going back. And you can look at these data wicks and you can see them for what they are. And trying to find a really good example of, so like here you can see on the 1 hour, okay, we'll go to the 1 hour. And, you know, we have these significant lows right here, right? We have these significant lows right here. These are all session liquidity. We have these significant lows right here, right? We are just creating a bunch of relative equal lows, right? But what happens? Well, price cared more about the data wick because it's a more significant liquidity pool than any of these session pools. All right. So this is why we consolidated for a while, because price was magnetizing towards the data wick, but it didn't have the fuel. So it had to generate liquidity during consolidation. And now we had some manipulation, tapped and swept session liquidity here. And that was enough fuel to get us to this data wick. But the data wick was the number one thing that was inhibiting price from being clean. And now that we have swept out this data wick, I believe we have red folder news tomorrow, so we might end up getting a data wick tomorrow. But that will be the draw on liquidity for the day. You know, like it makes it very simple when we have data wicks, because that we know is going to be the draw on liquidity. And once that's taken, then we can start looking at our session liquidity. We can start looking at our 930 wicks. We can start looking at old fair value gaps that have been unmitigated. Tons of things that are being overlooked as liquidity. But data wicks, data wicks, data wicks. I'm going to keep this short. Find data wicks, just know when the red folder news is, and you will see these data wicks, and you will see that these massive candles are data candles. So like I said, from this low to this high, this was a 137 point candle. And that's just a lot of volatility injecting into the market. This is very algorithmic, you know, it taps into key levels. And then, you know, obviously we swept, I explained this in the session liquidity. We ended up sweeping out a London high with this data wick. So pre-market already swept and manipulated. And this is why we had such a sell-off all this day, because we had all this low resistance liquidity. We already swept two pools of session liquidity. And then we had this liquidity void right here that was in a liquid price range that once it taps into it, usually just kind of floods back through. So with that being said, the main thing I want you guys to take away is data wicks, data wicks, data wicks, data wicks. Don't forget about them, because they will be a draw on liquidity eventually if they're not tagged the same day. I'll show you guys how long this took. It took from this day on Thursday all the way until this day, 5 days and 1 hour. But price remembered that this was a data wick. Okay. Took 5 days to rebalance. Typically it's, you know, like I said, same day, but we've been living inside of this consolidation area for quite some time now. But with that being said, that's all I have to say about data wicks. I hope you guys learned a little something, and I hope you guys can implement this into your guys' strategy and utilize these as liquidity pools. That being said, I will catch you guys in the next one. The next one is to be SMT divergences. All right. But I appreciate you guys for watching. I'll catch you guys in the next one. I'm out of here. Peace.